So the next corporate action which we have is known as rights issue, and it is somewhat opposite to the previous corporate action which we discussed, that was share buybacks. Now in share buybacks, the company bought its shares back from you. Okay, so during the IPO it had diluted its stake and the public bought some stake, and now the company wants to buy back its shares. That is share buyback. Now what is rights issue is company wants to raise some additional capital. Okay, so what it is saying, the current market price is 100 rupees right now. Okay, if you are the owner of the share of this particular company, I'm taking this example of 100 rupees for simplicity, then we will give you another share at a discounted price. Okay, so if you are the owner of the share which is worth 100 rupees, we'll sell the share to you for, let's say, 95 rupees. Okay, so now what is the company doing in this case is company is raising money from you. Okay, let's say that because the company needs some additional capital. Okay, the goal of the rights issue is to raise some additional capital for the company, right? So when in the share buybacks, the current market price was 100 rupees, the company was saying we'll purchase this share from you at 105, so you are at a profit. Now in rights issue, the company is saying the current market price is 100 rupees, but we are ready to buy the share, we are ready to sell the share to you at 95 rupees at a discounted price, right? So this is known as rights issue. Now what is this ratio? Here you can see 17:74. Now how do you read it? So you will get 17 shares at a discounted price, right? So rights issue is like you have the right to those 17 shares. You can interpret it something like this. So you will get those 17 shares at a discounted price for every 74 shares that you own. Okay, so let's say that you own 74 into 2, that is 148 shares. So you will get 34 shares, right? So for every 74 shares that you own, you will get 17 shares at a discounted price, right? So that is this kind of thing is known as a rights issue, right? And here again the X date, you can see that if you want these shares at a discounted price, so you need to buy. So let's say that this is the X date is 21st Jan. So again, if you bought 148 shares on 20th Jan, so on the record date you will have the shares in your demat account, and since you bought, so for every 74 shares you will get 17 shares at a discount. So since you bought 148 shares, you will get 34 shares at a discount, right? So this is known as rights issue. Okay, now this ratio is very important because sometimes people interpret it in a different way, right? People think that for every 17 shares you own, you will get 74 shares, 74 additional shares. Okay, the correct way to read this ratio is you will get 17 shares for every 74 shares that you own, right? So I hope this confusion won't bother you every time, right? So 17 shares for every 74 shares that you own. So this was a very short and short description of what is a rights issue. So this is the share of L&T Finance. Okay, and again under this corporate actions you can see it over here, rights issue, the X date, the ratio, everything you can find on moneycontrol.com, right? So this was all about rights issue. Now let's go to the last two types of corporate actions which are easy to understand, I would say. So those are bonus and split. So now let's go to bonus and split in the next video.